Today, the housing affordability disaster. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Just before I start, a quick reminder that tonight at 4:30 Sydney time, we'll be running a special DFA live event, which will be a special Edwin's Property Rant, but also we'll be joined by Louis Christopher from SQM, and he'll be going through his latest research. This is a not-to-miss event, not least because you can ask a question live. So we'll see you at 4:30 p.m. Sydney time this afternoon. Now, the National Dwelling Value to Income ratio reached a record high in the June quarter, according to new data analysis. A report on housing affordability from ANZ and Corelogic has outlined an analysis based on median income data from ANU against property statistics from the research specialists. Now, it is based on data up till June, by the way. It's found that the national dwelling value to income ratio reached a record high of 7.7 in the June quarter. That's above the decade average of 6.3 and up from 6.4 in the September 2020 quarter, when housing was impacted by COVID restrictions. The ratio was sharper for houses than for units, leading to the widest gap on record between the dwelling types. For houses, the ratio has risen from 6.7 to 8.1, while units experienced a more moderate increase from 6.2 to 6.8. Excluding the regions and focusing on capital cities, the dwelling value to income ratio was recorded at 8. That's the highest reading on record. And the report noted the combined capital city ratio had trended consistently higher since the September quarter last year. As of June, the median value across the combined capital cities was $727,427. That's a 52.1% premium on the equivalent median value across regional Australia. Sydney had the highest value to income ratio of any region at 10.1, followed by Melbourne and regional New South Wales. Both had a ratio of 8.5. But as there was a trend in increased migration out of the capital cities, dwelling values across regional Australia rose by 18.1% between March 2020 and June 2021, against a lift of 11.2% in combined capital city values. In regional Australia, the median dwelling value to income ratio was 6.8. Units similarly went from a low of 4.9 in September quarter last year to a high of 7 in the past June quarter. However, there are further property rises expected against household incomes in the coming months, as Australian house values rose a further 6.8% in the 4 months to October, while units increased 4.8%. Between the end of March 2020 and June 21, CoreLogic data suggested national median housing values rose by 12.6%. Over the same period, ANU income modelling was indicating that median household income rose by 0.2%. With housing values increasing faster than household incomes, each of the ANZ Corelogic housing affordability metrics have deteriorated at the national level, the ANZ and Corelogic report stated. Based on households saving 15% of their gross annual income, it would now take a typical household a record high of 10.2 years to save a 20% deposit for an Australian dwelling, as at the end of June. For houses, saving a 20% deposit would require a time frame of 10.8 years versus a 9-year period for units. Across capital cities, the average time frame needed to save a deposit picked up to 10.7 years, which included an 11.7-year period for houses and 9 years for median value of units. The report expressed concerns for first home buyers, noting it can be most challenging to get on the first run of the property ladder. While ABS lending data suggests first home buyer activity surged between June 2020 and January 2021, the number of monthly first home buyer loans secured has since trended down, falling 22.8% between the end of January to August 2021, the white paper said. it's likely that first home buyer demand was largely concentrated through a period of overlapping government incentives. As prices continue to surge, first home buyer demand is likely to continue to decline, and also pointed to declining rates of home ownership, with ABS data showing home ownership fell to 66.2% in the June 2018 period, in contrast to a rate of 68.3% in 2007 and 8 and 70.3% in 1997 to 98. While the CoreLogic and ANZ analysis was based on household savings 15% of their income, ABS national account data suggested the household savings ratio surged to 22% through the year to June 2020, against the previous decade average of 6.7%. Consumption patterns had shifted amid lockdown conditions. However, unlike the other metrics, mortgage serviceability has not blown out to new highs due to low rate environments currently, although of course they've recently changed. The proportion of income required to service a new mortgage on a median dwelling value nationally was estimated to be 37.1% by the end of the June quarter, above the decade average of 34.7% and the highest since March 2012. The proportion of income needed for a mortgage on a unit was 32.8%, up from a low of 29.1% during the September 2020 quarter. Meanwhile, for the detached dwellings, mortgage serviceability was 39.3% of income, up from a low of 32.4%. But 3 points to make. These averages mask considerable differences down at individual household levels. We are seeing some households putting more than 50% of their income on the mortgage in Sydney, for example. Secondly, this data is till June. Things have got worse to October. And thirdly, of course, the other point to make is that interest on mortgages, particularly fixed-rate mortgages, is now on the rise, and there is really very little sign of income growth. So this is just underscoring again how severely disadvantaged many people are with very, very unaffordable housing in Australia, thanks to 20 to 30 years of poor policy across Australia. We really do need to do things differently. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.